Hello everyone, welcome back to the channel. Thanks for being here. In today's video, I'm going to be speaking to you about my net worth, my thoughts, and my goals for the future. So you've seen what's on screen several times. This is my taxable investment portfolio, but it doesn't tell you the entire story. This tells you the entire story. This is a simple Excel spreadsheet that I use to calculate my net worth on a monthly basis. And you could see here to the right side, everything that I track. This is my assets, and then these are my debts. I also have a portion dedicated to my yearly dividend income. But you could see that I do try to track it as thoroughly as possible, including all of my accounts. There are some accounts, or one or two accounts, that I don't include, and that's because those are kind of earmarked for expenses, and I don't believe that I should be tracking them because that money is going to be spent. It's already basically written off. So I started tracking my net worth consistently starting in November 2020. While tracking my net worth, I also tracked the dollar value change by unit and also the percent change to see how well or how poorly I am doing month to month. And in November of 2020, you can see I had a net worth of about approximately $29,000. My net assets minus my net debt gives me roughly $29,000. So we're going to see how that value changed over time. So 1 month after, 2, 3, 4, and so on and so forth. And you could see that these variable changes, a lot that has to do with is market changes, also basically like found money such as tax returns and so on and so forth. Going forward a little bit more, I also had a job change around November of 2021. So after this, I began to save a little bit more. But also remember, at the same time, the market wasn't doing so well. It was declining, so just because I had the new job and I was able to invest more, I didn't really see it as well. Regardless, this continued and I still invested my money month to month and still tracked consistently. So going forward, several more times. And you could see that I even tracked the months that I did badly in. So I was down $4,300 in, looks like May of 2022, down $1,000 in March of 2022. So positive or negative, I track it just to see where I am. I'm also going to show you a graph of what this looks like, but I'm going to go forward a little bit more and show you the basically main topic of this video. So in January of 2021, I had a net worth of around $99,000. So I passed a net worth of $100,000 around January or February of this year, 2023, which is often said to be an initial goal. Because of this, I basically wanted to show you what this looks like and share my thoughts. So this is kind of going to serve as an initial video, and I'll continue to do this monthly. The intent is to somewhat be of an investment journal in video form. Basically, I'm making this Excel spreadsheet, which I was doing anyway, into a video that I will be sharing and tracking my progress, positive or negative, month to month. And I'm going to bring you forward to current, or at least the last, which was May of 2023, last month. So that way you get an idea of where we're going to be for the month of June. And I'll do this calculation on the 21st of every month, so I expect the video to be published a few days after that once I do the recording and so on and so forth, depending on my work commitments. So I want to show you a visual of what this looks like, because when a lot of people speak to net worth, they basically just see the number and it's great, yeah, I have a net worth of $111,000 or $112,000. But what's not really spoken about is what that really looks like. So I really want to give you a visualization of what it looks like. So here's a pie graph of what this looks like. I added up my investments and then weighted them. So you could see the most significant portion is in a taxable investment portion. These taxable investments are ETFs that I showed earlier in this video, and I also made an earlier video about a week ago about these investments. The next two are basically in even amounts. These are split between my 401k and IRA at 19%. And I also have about 18% of my money in high yield savings, checking accounts, and also CDs to basically maximize the interest that I'm earning. So with my 401k, I do get employer match up to a certain percentage. So I try to contribute up to that a little bit more actually to get all those benefits and to save a little bit more for retirement. The reason my taxable investments are so high is because I just like having that money current. When I initially started, it was kind of like a savings account that I didn't think I was ever going to need to touch, but it just grew and grew from there. So now it's become a very sizable portion of my overall net worth. And for the cash, the majority, as I said, is in high yield savings or CDs. However, I do have a few thousand in non-high yield accounts at brick and mortar banks for easy access. And after my 401k and my cash, the next largest asset is my car. And this occasionally isn't seen as an asset because it's basically for like living purposes. However, because I tracked the loan before it was paid off, I thought it was only fair to include the asset that tracked it. And at the end of the day, it is still an asset that I own, so I can sell it and get maybe a cheaper car. So like if I sold this car for approximately $20,000, what it's worth now, and got a car for $10,000, I would still have $10,000 left over. That would make my net worth kind of look funky. So I included the car to basically give the full picture of my net worth. Finally, the two smaller slices are my HSA, which is just a health savings account. It's pretty straightforward that it's just for health needs, so I basically don't touch it, of course, unless I need to pay a copay, which I generally don't need to do. My health insurance kind of pays that already through my employer. And then the other portion is basically assets that are kind of minor that are all added up. So I do have a small Robinhood account that I have, and basically any other asset that isn't large enough to have its own slice to be visualized, but it's still part of my assets. So it basically goes into the other bucket. If I do get a portion of that that's larger, then it will get its own slice. But until then, I'm just going to throw it into a catch-all bucket called other. And another part of the reason why I'm doing this video is because there is a lot of talk around the first $100,000. There's many famous people that have spoken about the first $100,000. Charlie Munger, who is the co-chair of Berkshire Hathaway, once said something like, the first $1,000 is the toughest to earn, but it's the most crucial part of building wealth. So there is a lot of basically hype around the first $100,000. We see a search for the first $100,000 in the popular community financial independence on Reddit, and we do see the topic come up quite often. Everybody speaks about their first $100,000 in basically post form, and it's like even somebody commented here and made a post, why does everybody say that the first $100,000 is the hardest, and so on and so forth. It seems this topic comes up quite often, so again, I wanted to make this video to give you my thoughts, being that I achieved the first $100,000 a few months ago, and I'm still kind of in the area of $100,000. So as the saying goes, the first $100,000 is a big accomplishment. However, to be honest, I don't really feel any major significance in this currently. There are three major points of my net worth that are difficult for me to contend with. My student loans, my car that I have, and all the cash that I have. And the graph only shows my net assets. It doesn't show my student loans, which are a portion of that debt. But fortunately, as it is currently, my student loans are basically all of my debt. I did have around $46,000 up until maybe a year ago, but I was following Dave Ramsey there for a little bit. Is like not a strict sense, but I saw the car as something that I needed to get to work at the time. I had a longer commute, I got a job, so I needed reliable transportation, so I I bought a car, and to get the car, I had a car loan. You can see my car is basically a Kia, which was some of the cheapest car I could find at the time, but it was still, a new car nonetheless, so I needed to get a loan. But like I said, I was following Dave Ramsey and also several other financial YouTubers, and I kind of agreed with the concept that a car loan is kind of a negative, because you have a loan that is accruing 6% interest, and the asset that is backing the loan is a depreciating asset, so it's kind of affecting you both in interest and also depreciation. So I took a big chunk of cash and just paid the car off after a few months. And that left me with just my student loans as my main form of debt. I did have some credit card debt at times that I add in, but that's paid off at the end of every month, and it's usually very minor. It might be for just general things, maybe for gas or just one-off expenses that I just didn't want to put on a debit card. So I use my credit card, gain some points, and just pay it off. So now I have this student loan payment, which was deferred because of the actions of President Trump during the coronavirus, and then it was also punted off again due to the actions of President Biden due to the coronavirus as well. Both of them signed executive orders saying that it was a national emergency. So my student loans got kicked forward, and I stopped making payments because it was 0%. Then there was a lot of talk that student loans may be forgiven, so I was like, well, if my loans are going to be forgiven, should I really be making payments? They're at 0%. It's kind of pointless. I don't know what's going to happen. So I stopped making payments, and I deferred that money into either savings or investments. But at the end of the day, that still leaves me with this student loan, and now there's this Supreme Court ruling that is due to come up near the end of this month that will decide Joe Biden's the fate of Joe Biden's executive order regarding student loans, forgiving $10,000 to $20,000 depending on your eligibility criteria. So with that said, that will leave me with a payment of approximately $300 a month, but as I don't enjoy having debt, I am probably going to be making double payments, and I may also take some cash out from the cash that I saved and pay off my student loans as fast as possible, because I really do not want that debt. I believe my total aggregated interest rate on that debt is probably around like 5 or 6%. So the sooner I get that paid off, the better, and that will just be something I don't have to worry about. And that cash flow won't be going to debt, it will be going to investments or cost of living. Now, after my student loans, the next pay point will be my car. So as I kind of spoke earlier about the car as a loan, it's an asset, but the pain point is that it's a depreciating asset. So every month I basically depreciate the car by about $250. Originally what I did for depreciation was I went online and I looked up the value of my car by using like the 3 models of the similar car that I could find, adding it all together, and then basically getting an average of the 3. That it became a lot of work for basically like a negligible tracking payoff. So basically what I did was I just decided to every single month take off $250 to $500 depending on like the month and the wear and tear on my car. So I'm basically losing value every single month on this car as expected. It's a depreciating asset, and I think I'm gonna stop depreciating it probably around like its value when it's around like $7,000 or $8,000. Cars are mostly depreciated by that time, so the depreciation is basically a slope. Cars depreciate a lot initially, and then it slopes off, and they still depreciate it, but it's kind of a slighter slope. But the car doesn't really generate me anything except getting me from point A to point B. I mean, that's important, but it's not an asset that is generating me capital appreciation or income. So it's a pain point, and as the graph indicates, it's 13% of my net worth, and it's a depreciating asset. So this car is going to depreciate, and basically my net worth is going to go down and down and down and down and down because of that car for some time. And it being 13% of my net worth is relatively significant because you can see that the car is worth $18,250 currently by my estimation, and my net worth is currently about $12,000. So it's pretty simple math. Take off that depreciating asset from my net worth, and my net worth is officially under $100,000. So the car is not really a good asset to hold on your balance sheet. And in some ways, I don't even feel the impact of having $100,000 because, as I said prior, the market goes up and down month to month, year to year. So recently, the market's been kind of flat. It did a drop there, and then it's kind of been stagnant. We haven't had those huge runoffs previously. So I've been investing money. It hasn't really been going anywhere. And then the car, which is a depreciating asset, is a significant part of my net worth. And it doesn't really do much to increase. Now, fortunately, that doesn't mean my net worth has been completely stagnant. You can see I have been gaining some months, but compared to what it could be in an appreciating market, and if that car, that $18,000 asset were actually investments, I would be gaining more money than I would if it weren't. And then finally, the last pain point is my cash holding. So I have 18% of my entire net worth in cash. And this is good and bad. The cash offers great peace of mind. So basically, in a down month, I don't really worry. I have a significant cash portion that kind of keeps my worries away, keeps volatility away. My net worth might not change as drastically as it would if my total investments were in just in taxable investments or my 401k. So the cash gives me a great cushion. Within that is also my emergency fund, so that's not going to go away. That's earmarked for, of course, emergencies, major expenses that randomly come up. It's very important to have just that peace of mind. But the thing is it's a non-performing asset. It's not as bad as the car because it still generates some income through bank interest. And as interest rates have been increasing recently, as you could see on screen, Ally, my current high yield bank, their interest rate is about 4% right now, and I do have some CDs with them that do generate me some income so that it's not stagnant. But it's really not as good as my investments that could earn me, whether it be capital appreciation or dividends or dividend growth. The cash is basically there for peace of mind. It's kind of a non-performing asset, and there's no capital appreciation to it. So because of those things, the cash, the car, and the student loans, the first $100,000 doesn't seem to be that impactful. It's a great thing to have, and I understand that this is a goal for many people. It was one of my goals for the longest time too. I started out with $30,000 doing the calculation, so I basically increased my net worth 4 times in those approximately 2.5 years. But looking back to myself at that time, it was such a big goal for me, but then it happened and I was like, it's really not that major because it's not like I can retire. It's not like it's generating me a whole lot of income. Some of those are non-performing assets. Some of them are depreciating assets. So I just don't feel the impact of it. So I pretty much just spoke about my idea a few years ago, thinking, $100,000 is like a whole lot of money. It would be great to have $100,000, but now I want to like consider my goals for like 10 years into the future, 20 years into the future. What is my net worth goal going to be for? And where I am now, and I might, of course, have a different mindset of this when I achieve it, but right now I would consider $1 million to be a great net worth, and my yearly passive income, which is currently at 1,429 as of May 21st. I would like that to be 20,000 per year. I think that would cover around my yearly rent roughly in the area that I live, or it would cover several other expenses, whether it be my gas, my car insurance, my food. It would basically cover a significant portion of my expected expenses. And I think that either of them are relatively achievable goals. $1 million today it's a very respectable net worth, but in truth, it's not like something that would be like considered really like wealthy or rich. Especially when we include things like the car, the house, that's a non-performing asset generally, that you're not going to be able to sell. You're not going to be able to really get your equity that easily back unless you do a HELOC, which you're just going to incur debt with. And I think $20,000 a year will also be achievable. If my net worth is $100,000, I do expect to be able to achieve a dividend income of about $20,000 a year on that through my taxable investments. At that point, I think that I'll have enough taxable investments to generate $20,000 a year. So I don't think that is an unachievable goal. And even if I'm unable to achieve those two goals, I think getting as close as I can to it will be a great thing too. So I'm going to shoot for it, and even if I'm unable to achieve it, I'm at least, like let's say I get $700,000, let's say, and I'm not able to get $1 million. That's still going to be 7 times where I'm at right now, and I think that is a great sum of money as well. So, and while I do that, whether I fail or not, you all are going to be brought along for the journey. Like I said, this is kind of going to be a video journey that I am making, kind of like a video diary, a video template to go along with this spreadsheet. This kind of just gives you the numbers. It doesn't give you my ideas like a video can. And alright everybody, that is it for today's video. If you enjoyed this, please give this video a like or leave a comment. It would be greatly appreciated. See you all next time. And like I said, I am going to be doing an update around the end of the month. So I will see you there. Thanks for watching.